Okay, here we're looking at AMD, and this has been a frustrating scenario here. We're down about 15%. They missed their earnings. It's showing that they're going to be slowing down. We talked about a potential for this if we weren't really seeing this move out of here, that this could start to be a pullback too, and then we may have not completed this correction. And that was one of my concerns, my big concerns, because we thought maybe this was an ABC and that we might see this kind of go a little deeper. But this could be the two wave, and based upon today's action, I think that might be the case. When we look at this in the longer term, what I'm thinking here is that this initial move we saw here was your one wave. You had your one wave here, and then you see a deep three, and then you see your ABC here rather clearly, your four wave, and then you'll see one, two, and then the three wave. And I think that makes sense because we're seeing it very, very similar to what was happening here. Because see how it kind of we had a deep three move, and then you see this four-way running sideways, and then that last move, and then it tries to rally back. And this is kind of like a counter four on the longer term, and then you see your one, two, three, four. And then I think we're seeing our five move. This is where it should start to try to come out and turn and at least rebound a little bit. I'm not saying, hey, we're going to have some incredible move off this, but I'm thinking that we still have, as this is a little overextended, I think they'll get a little aggressive, but I would watch around the 2 range, the 206. And what I did is I did several ratios here, and a lot of times they can come into some big benefit when you see multiple ratios at certain ranges. It can give you an idea, hey, where are we going on this? This is a little frustrating because it looked like we were starting to see this pull out of this range, and we had a very nice initial move. I thought we were really starting to hold this, and as long as we held this, I thought we were okay, and I thought we might see that break. But the news with this is really broke us deep from here. And so what we're going to do is here I've done several ratios. Here's a 5 versus 3. So this is on the longer term move, which is very important to do to get an idea where will that end or where should it end. This is the 50% return. This is 50% range, and it's also the 61% ratio right here, which is around the 193 level. So I think that that could be really where eventually could start to go and start to almost complete. Now it can go 100%. That's certainly possible. So it can go back down. I think maybe to the 180 level is really deep. But I think on the short term, I think it tries to hold this 206, 200 range, and maybe they move it a little deeper. But I think we see that, and then we see the counter move. The counter move we'll get into, but I think you need at least one day of this continued slide here as it tries to kind of come back. But I think we need to put in a sell for it. And what I'm thinking here is to try to get out around this 220 area. That's a possibility, but I'm looking that we could try to get a little better. Because right here, we're about 20% on the downside here. I don't want it to go too far, but I don't think it makes sense to exit too soon here, because I think as this has had a pretty good, I think, overextended move. I think it'll go a little deeper, but I think it starts to try to come around here. We also have some time ratios that I did on because I've done it on both ranges, the smaller count and the longer count, and this is what we have the around the 100%, so it could be a very quick bounce back, which I think makes more sense. I think we'll have a couple days maybe here, and then you see the counter move. The counter move would come up into this 225 range. I think that would be some significant resistance. This is a prior low. I think trying to get a little bit more than that would probably be a little bit a little bit difficult. When we're in that 220 level, we're still taking a hit. But it's not going to be as big of one. It'll be about 13%. So I always try to keep things to a 10% range if I can. So keep in mind, there's a standing order, okay, for 220 or better. on this to try to get any bounce. Okay, we're not going to just take what we can here, because this makes stupid sense to kind of see such an exaggerated, overextended move and then sell into it. There will be some follow through, of course, but you want to wait for that little counter move. Even unsuccessfully trying to rally back, you still will see an attempt. You got to watch that. That may just drop just shy of that, but I think it should try to make it past that. I'm looking at something right now. Watch around 218 to 220. Those are the two target ranges I think would see some significant resistance on the way back. And see here the 50% right here at 218. So if you see 218, we'd still take 218. If we're starting to see this stall, keep in mind this is one of those that you got to kind of watch, but I would put it around 218 or better.